Hello again. Welcome to Module 2. Before we get into the details of spend control, it's probably a good idea to talk about a few foundational principles first. As you know, there's no silver bullet for spend control. It's a multifaceted, ongoing endeavor, and you'll probably have to keep adapting as time goes by. But while things might change as technology advances and new rules and regulations turn up, certain principles will always apply. That's why we call them the 6 building blocks for spend control. If you do nothing else, at least pay attention to these. They'll go a long way to help you manage your company expenses and achieve notable results early on in your role. We'll look at spend culture and policies, budgeting, contracts and negotiations, payment methods, and tracking and visibility. So first up is spend culture. You've heard business gurus drum on and on about company culture, but it's because such a crucial element of successful, sustainable business. Spend culture forms part of the overall organizational culture and reflects the benefits and behaviors that determine why, how, and when money is spent. But as a finance manager, how can you steer your company's spend culture in the right direction? How can you cultivate well-aligned attitudes around capital and resource allocation? The first thing is remembering that your choices and actions as a leader set an example to the rest of your team. How you talk about and manage your company finances will send a message about what's acceptable and what isn't. Your personal spending too will have an indirect impact, so be smart about your decisions and the information you share. You also need to ensure that your spending strategy aligns with your company values and supports the bigger vision. In other words, you need to spend and save in accordance with your business objectives. Some companies invest in soft assets like training and hiring top talent, whereas others invest in real estate or state-of-the-art technology. Whatever an organization chooses to spend on reveals a great deal about its priorities, mission, and management style. A spend policy is a formal way of conveying an organization's take on spending. It reflects its rules around business expenses. These policies apply to all employees who are authorized to purchase on behalf of the business. The rules included here will drive employees' spending actions, so it's essential that they're crystal clear. But it's also equally important to ensure that employees actually read these documents. Spend policies only work when they are properly implemented and enforced. To that end, it's advisable to build spend policies into payment methods by way of limits and restrictions. That way, employees must get formal approval for purchasing unauthorized goods or exceeding the limit. Another building block for effective spend control is budgeting. Finance managers are well aware of the importance of budgeting. Budgets help you identify available capital, anticipate incoming revenue, and estimate expenses. They allow you to measure performance against expenditure and ensure there are adequate resources for growth initiatives. That's why the budget should be designed around your strategic objectives. It should reflect your priorities and the direction you're headed as an organization. The budgeting process is a great opportunity to include team members and to communicate your approach. And it's also important to get them on board with the vision. But on a more practical level, budgets also keep you focused on cash flow, cost reduction, and ROI. So when a project goes over budget, you can quickly intervene to get back on targets again. Without a budget, you simply cannot plan or control your company's finances. Which brings us to the next building block. An easily neglected aspect of spend control is contracts and negotiations. Finance managers can reduce company expenses radically by reviewing their contracts and improving their team's negotiation skills. Many vendors and service providers are open to negotiating their standard prices, but you have to ask. But before getting into this kind of conversation, there needs to be an existing relationship of credibility and trust between your company and the supplier. Before your meeting, do some research about the vendor, their industry, and how they're affected by the current economy. This will give you a good indication of their standing. The key to a successful negotiation is framing your proposition in a way that highlights the benefits to both parties. As you communicate your intentions and determine the supplier's position, ask questions about your existing agreement, their quantity requirements, shipping methods, and other client agreements. Going into the conversation, you must know exactly what you want to get out of it, but at the same time, be prepared to compromise. If you're aiming for a win-win situation, it's unlikely that you'll get everything you want. You might have to budge on certain points to benefit elsewhere. For example, you might have to extend the contract longer than you wanted to get them to agree to your terms. The goal is for both parties to profit in the long run. Successful negotiations also require complete honesty and transparency. Be open about where you stand and your needs. Keep in mind though that even if you do all the right things, there's no guarantee that the deal will pan out. Sometimes you have to accept that the partnership is not meant to be, either because the timing is off or it's just not a good fit. It's best to accept those instances and move on knowing that there's a more suitable partnership elsewhere. Now, let's talk about payment methods. Controlling how your team pays for things is a simple yet effective spend control strategy. Old-fashioned tools like expense reports and company credit cards just don't work well anymore. Nowadays, there are safer, more efficient payment alternatives. You could give employees physical expense cards with customizable limits specific to each individual. This way, they don't have to pay for things out of pocket, eliminating the hassle of submitting expense reports. For online payments, you could consider supplying virtual credit cards. These provide an additional layer of security by concealing your credit card details. Because each number is issued only once before it's discarded, it's very difficult for scammers to use that number for fraudulent purchases. When it comes to submitting invoices and filing expenses, automation is key. Instead of going the paper-based route, it's safer and more efficient to use a digital platform. Once employees have entered the data, it's immediately visible to the whole finance team and everyone has complete visibility at all times. This is the perfect segue to the final building block. In order to control your company's spending, you need a way of tracking and reviewing expenses in real time. This will allow you to make proactive rather than reactive decisions. So what you need is a central platform or dashboard where the finance team can see past and scheduled payments at a glance. While an accounting ledger can technically track all of this, it will only be updated once the credit card bill arrives and employee expense claims come in. If you're serious about financial control, you need this data the moment payments are created. Without automation and real-time visibility and with stacks of siloed data, it's impossible for finance managers to get an accurate view of company spending. This prevents them from taking swift action when necessary. It also leads to a host of other problems like duplicate or redundant purchases, rogue spending, late invoices, theft, and more. So to recap, our 6 building blocks for spend control are 1. Creating the right spend culture. 2. Having a spend policy in place. 3. Getting serious about budgets. 4. Negotiating for better contract rates. 5. Implementing safer payment methods. And 6. Tracking your expenses in real time. In the next video, we talk about conducting a hassle-free spend analysis. This is the first step to making an impact in your first quarter as finance manager. See you there.